Talk to me about interest rates because this is pretty much all I hear about. So,
This is like all I talk about lately. I've been working a ton of renewals, and this is just actually even with first time home buyers, it is just the biggest topic of conversation. Obviously, we've been through like a historical time with the climb in rates, and then we just had our first rate cut in 4 years on was it June 5th? I
yeah.
didn't know that. But yeah, I've been talking about this a lot lately. The first thing I kind of want to get out of the way is the Bank of Canada rate announcements are tied only to the variable rate, adjustable rate mortgages, or lines of credit. So those are the things that are impacted by those announcements. They do not impact the fixed rate. I
Okay.
was like, out of the way. I get so many people reaching out to me after an announcement who have like a fixed rate or that would be their preference. Like, how has it affected us? Truth is that it hasn't. um, but right now, we are seeing rates trend downwards. Pretty sure like every economist is in agreement that we're going to continue to see rate cuts moving forward. The next one would be July 24th, July 29th.
I can't remember.
I will know that after this call. But yeah, we're predicted to continue to go down. So the last rate cut, we saw the prime rate drop from 7.2% to 6.95%. A lot of people ask me how this impacts a variable rate mortgage, and that's about $15 per $100,000 of your mortgage payment. So not a huge impact right off the bat,
Yeah.
but we're kind of starting to move in that direction. The other question that I keep getting is like, when does that change my variable rate? And the day of the announcement, it changes. You'll find that variable rates or lines of credit are always expressed as prime minus a discount factor.
Yeah.
So, for example, prime minus 1%, you would now be at 5.95%. So, that's what's going on with the variable rates. Again, we're hoping for another cut. I'm going to bet on it, but we can place a little over under bet later. And then moving on to the fixed rates, I think this is one thing that a lot of people don't understand and we're not taught a lot about. But Canadian mortgages in the fixed rate space are priced based on the bond yield spread. So I don't want to get like too nerdy on this because it is something that people in like my industry watch quite often. But essentially, the spread is dictating how much money lenders are actually making off of lending that money out to banks, to consumers.
Okay.
So I'm going to send you a link so you can send it out to anybody that's been watching. But essentially, the bond yield spread that you're going to see, um, mortgage rates are typically priced about 1 to 2% higher than that spread, maybe about 1.5%.
Okay.
So, with that in mind, right now you'll look and they're at about two and a half, two. So that's telling us they're making like a lot of money. But banks obviously love that. So what a lot of people don't understand about fixed rate mortgages is that they're priced entirely differently than the variable rate. Um, so basically, consumer lenders like banks or credit unions are going to be using like the 5 year bond spread to price mortgages instead of like kind of dorking out on explaining exactly what that means. The easiest way to explain it is like the bond yields are going to show exactly how much money the banks are making off of lending out to people like you and me. So typically, with I'm going to send you a link so you can send out to anybody watching if they really want to be like monitoring this stuff. Is typically mortgage price about 1.5% higher bond yield spread there. So you'll notice on the link that you're sending out is that the spread is actually very high right now. It's closer to like 2.5%. So kind of what that's telling us is that rates are going to start trickling downwards. If you hang around like our office long enough, you'll hear us yell in the morning like bond yields have fallen off a cliff. That's like that's like kind of dictating to us that fixed rates are probably going to be going down. They're a lot more volatile than I would say the variable rate is in terms of on the day-to-day changes. They can kind of go up and down. But you'll notice that when rates are starting to go up, lenders are very quick to raise their rates, obviously a greater rate of return. But on the way down, they tend to be a little bit more sticky. So that's what's happening right now, is that they're slowly ticking downwards to fit that trend of about 1.5% higher than the bond yield spread right there. Again, on the market watch, I'm going to send you. But it seems like all good news, right? Things are trickling downwards, but they're not going to be priced the exact same way as the variable rate.
Okay. Hmm.
If you need any more clarification on that, like she can link my number. You can give me a call. I've been talking about it like all day, every day with renewals.
So, and then obviously what I've, what, something I've learned is interest rates go down, house prices start to go back up.
It's an
So,
inverse relationship, right?
yeah.
Well,
So,
like the obvious explanation is that when rates are down, you qualify for more home. So
right,
it's a natural reaction to something like that, right?
right. Well, hopefully the prices of homes don't skyrocket again, but we'll see.
So like so far we've been like it hasn't been a huge like shift in the market, but historically that's been what has happened. I think the most notable and obvious example to anybody watching would be COVID. You know, nothing was happening, like recessionary period, so the government cut the rates to try to stimulate the economy again. And then going down to 1 to 2% interest rates, everybody was buying homes. You're seeing people offer like 200,000 above, right? But that was the exact inverse relationship. Interest rates went down. People qualified for way more in terms of what they could afford in a home.
And now people,
Um,
a few years later, are defaulting on their mortgage.
so people, yeah, people are struggling to make their payments for sure. So typically, what we would look for to see like how much of an impact that's actually having is like people are going to default on their credit cards and their car payments before they're going to default on their home.
Yeah.
So those rates have risen on the people that are starting to default on payments, but it's not as significant as most people are thinking because we do have things like the stress test and all those things in place. But it is definitely hard on people. Um, I wouldn't say like everybody's house is on fire right now, but it's stressful. And I think that's why we really had to take some action here to start cutting rates. Because
Right.
it's like 70% of mortgages are renewing in the next 2 years. And to be at like a 2% or a 1% renewing into what was like high fives and sixes is just not, it's not affordable, right?
Wow.
So,
Yeah. Someone, whatever, somebody, you know her too. Her mortgage went from like 2,500 and I think she said it's like 7,000 now.
that seems like a pretty egregious. But I'm actually finding, which is kind of funny because so we ran what was called like the variable to fixed campaign.
Okay.
We exercised like a rate hold with anybody who had a variable and just kind of watched what happened over the next couple rate announcements. And when we saw that the trend was so far up, we locked them into the rate we had previously held. So we flipped, I think like 70% of the entire database into a fixed rate mortgage. So we eliminated that whole variable climb. But you'll find that the people who stuck with the variable, now that things are coming down, like they already rode that wave up, like they are like sticking with it to ride it down,
Yeah.
or they want like, nothing to do with the variable. They're done with it. But I've had clients being like, "Hey, I'm going to do a fix, but like if that freaking variable actually beats out, like I'm not going to be able to sleep at night because I wrote it up." I'm like,
Oh my
I know.
God. It's,
So, sorry, what was that?
well, I can just that I see why that is stressful. Like I see why people lose sleep over this.
Well, it's like historically the variable rate has beat out the fixed rate. Like it just always has over the lifespan of your mortgage. But we experienced a time in history where that was not true at all. Right. So we're hoping that the market begins to balance again. But I think going back to what we had started talking about is that inverse relationship between interest rates and home prices has kind of always remained a pattern and a trend. So again, for people that you were speaking to that are say like first time home buyers that are trying to time interest rates and time the market, I hate to use that quote like date the rate, marry the home, but like the one thing that you will not change is how much you pay. Your interest rate will change throughout the life of your mortgage. And trying to time things is just not going to work, especially like we were talking before this. There was that projection that like house prices are supposed to peak in 2026.
Yeah.
Right? Immigration is going to be highest, inventory will be lowest. So, like, which one do you want? Lower interest rate, higher home price? That's a personal preference, I guess. But
Wow.
yeah, that's my spiel on that.
Good shit. Good knowledge.
I can say one more thing about recent trends.
Tell me.
As I was kind of like saying, I work on I have my own book of business, and then I work on a book of business that does about like 200 million in transactions a year. So we truly do get to see kind of trends from all over Ontario, even through BC, Alberta, East Coast. Time and time again, we've always experienced that like once Toronto starts popping off, it's usually like a trickle effect down through the Golden Horseshoe, right? So then we'll see it hitting through like Mississauga, Oakville, Burlington, and we see multiple offer situations happening all along kind of the Golden Horseshoe. And so for us, Toronto has been like back in the game for a couple months now. We're seeing homes going for over asking. We're seeing different strategies such as pricing low and starting like obviously pricing very low and starting like stimulating a lot of competition. It's been like a great strategy that's worked for a lot of agents that we're working
I've been
with.
seeing that a lot in Brantford.
I know you have. I was gonna say.
I was gonna say, like almost every
I can't
property,
believe it. Look at this price.
it's like almost every property in the like $300,000 to $500,000 range. I'm gonna say like 85% of them are set bidding war dates, so they price it low, and then
It's
yeah.
like there's so much of the population that's competing for the same price range at this point.
Oh,
Because
it's
like as much as we want to say like the relationship between homes and like interest rates, like the price, it's like qualifying seems to be the thing. Is like if you qualify, you buy. But everyone that's say like in the younger age bracket, they seem to be qualifying in kind of the same area, unless they have like a significant amount of help from
from the
parents, or some people just kind of skyrocket into their careers early as well.
yeah.
But that like certain price point there that we've been working in, especially for some of your clients there, can be
Yeah,
tough.
I know.
Maybe
And it's like I
20
work,
offers on the property.
what's that?
Remember, there was like 20 offers or something on that one property that was crazy.
I was gonna say the one on in Hamilton was listed for I think it was 399, and I'm pretty sure we went in like over 100K, like about 100K over asking, and I think it went for 555 something. And I've seen that like quite a bit lately. So it's just like if you see something listed for 399, it's going for somewhere in the fives.
Yeah, especially if you're looking at the quality of the property as well. So that, yeah, it's definitely a common strategy. But I
Yeah.
think that's just like the struggle for first time home buyers, right? I think that's why like timing the market is near impossible. It's like if you qualify, you buy. And unfortunately, like right now, there's going to be competition.
Yeah. From a
And
mortgage
that's saying to like drive until you can buy. It's like drive from drive, keep going.
yeah, I actually heard, I don't know who I heard say that earlier. I think I was in like a presentation, but I heard somebody say that, like, just keep driving until you can afford it. And I'm
Well,
like,
that's
I
like the
wouldn't
trick
even be in
effect,
Canada.
right? Where you see like Toronto's popping off, and it's like I'm gonna keep driving until I get the house. Maybe people end up here in Niagara.
Honestly, like when it's my time to buy, which whatever, I don't even want to like put a time frame on it, but yeah, I probably, I don't know if I'll be in Hamilton. I would like to, but I'll probably be more somewhere in the outskirts, like Jarvis
I
or
think that's just your style, anyways. Jarvis. Oh my god, I forgot Jarvis existed.
I only say that
Jarvis
because me and Kyle like a few months ago went to go look at this like like beautiful house for 299 in Jarvis. I fucking sorry. I wanted to buy it so bad, but the house was literally tipping over. Like it was a tear down. So
Give me a foundation issue. It's fine.
it's okay. It's just a little
Even houses like that are going right now, right? It's just like the person that's determined to. Ooh, there's a blue jay out there. Sorry. I guess like the having some like trades background right now would be super handy, right? If you have a little bit of a distress listing, knowing that you can fix it up, maybe that's
that's
the.
what I want to do so badly.
Oh
Anything
no, I
to
think
get
like
first time home buyers to help in this stressful process of getting into the home market.
start early. Like even if you have no baseline on what you could afford, if you have stable employment, like basically that is like the one thing. People come to me all the time and they like work here part time, they work there part time, and they quit and they start new jobs. You need stable employment. So lenders are going to look at like, hey, where are they going to pay this mortgage payment from? So if you're somebody that has that stable income, start the process, right? You don't even have to have a down payment started really to do the pre-approval process because we can set goals together. Because if there is something like glaringly wrong with your application, we can get ahead of it.
Yeah.
But as we're kind of recovering throughout this video, is that so many people don't know about their credit score, the debt to income ratios. They don't know. It's all like a shot in the dark. So I
Yeah.
think just as early as that, hey, I've got stable employment, I'm starting to save money, I'm thinking about buying a home, talking to a mortgage agent or a realtor is a great place to start, because it's education at the end of the day that's going to empower you to reach your goals or to feel confident to move into the housing market.
Yeah. I just think, yeah, the more you know, the better suited you're gonna be. Like,
I've had people reach out to me really early too, and it's even helped them decide like what job they're going to take. We talked to somebody the other day that's like, I've got 2 offers on the table for a job. One of
wow,
them was no guaranteed hours. One of them was a contracting position, which was a great job, but it's like
not
with a
kidding.
contracting position, it wasn't in the same field either. It's like you're going to have to wait to get your 2-year average, or maybe we'll move you into the B space. Or if you take this option, this is what it would look like moving forward. So that's also a thing that a lot of people don't know, right?
We got to teach them, Miranda.
You gotta teach, like, set up a booth at these schools. Let's
Our
get
face
t-shirts
off.
made. Yeah. Put a jar out for a new AC unit. This is horrible. Yeah, no, honestly, the best place to start is just get some education under your belt and hopefully find somebody that's pleasant to work with that'll be willing to work with you on that journey, right? Because
Yeah.
it's not easy getting into the market. So I think also like not being so hard on yourself. What they said, the average age of the first time home buyer is now like well into your 30s. And I
Yeah.
think, what was that stat? Was it 1/3 or 2/3 of first time home buyers had up to $80,000 gifted to them from their parents or relatives to get into the market? That's not attainable for everybody, and everybody's kind of on a different journey. So yours might look different from somebody else's, but
Yeah.
get educated and, you know, build a good team around you.
Yeah, exactly. Awesome. Well, yeah, thanks again for sharing all your
I'm
knowledge.
going to put our fists together.